Do you know what the difference between a profit factor and a risk factor is? If you are a member to StockMarketCaddy.com, hopefully you do, but you most certainly know what a profit factor is. And if you've been following us on YouTube or on Twitter, you probably have heard us talk about it a lot. It's very important to what we do. You see, the money is not what we track. Percentage returns is not what we track. Win-loss ratios is not what we track. That is what everybody else does. If we were tracking those metrics, if we were keeping score by those metrics, we would be trading greed and fear. We're not about that. Over the next few minutes, I'm going to explain to everyone, especially those that are not familiar with who we are, what profit factor is. But I hope you will stay for the full video because I'm going to explain further what risk factor is and the difference between the two and how important it is. This short video could be very helpful to your trading. It will also give you insights as to who we are and who we are not. I am Bagadon at StockMarketCaddy.com. Today is February 18th, Saturday morning at about 10 a.m. We are not a brokerage. We are not managing anyone else's money. We are a mentoring site for those mature persons who want to be mature traders and get rid of the emotions of their trading by trading systematically, robotically. We are a mentor. We're not about handing out the fish. We are all about enabling and empowering you to trade as a business, trading your own capital for fun, enjoyment, and most of all, profit day in and day out. Let me explain to you first what profit factor is and then bring it home and talk to you briefly about risk factor. Profit factor, what is it? Profit factor is when you take your gross profit and your gross loss for a given trade, a given day, a given trading week, or a career. When you divide your gross profit by your gross loss, it will give you a metric. When that profit factor, if that profit factor is under 1, you are a losing money machine. You're losing money. When you have a profit factor over 1, you're making money. When it's 1 to 2, you're working hard. 2 to 3, you're doing much better. Over 3, you become a money-making machine. The win-loss ratio will take care of itself. The percentage return will take care of itself. The money will take care of itself. Our members and what we teach focus on the profit factor. So they're not focusing on what Wall Street and Madison Avenue want you focused on, greed, and reacting to greed and fear. For if you do, you will lose, and they know that. Let me give you a further example. If in a given week you make $10,000 right here, gross, and you lose $5,000 gross, your profit factor is 2. Yes, you netted $5,000, the difference between the two, but your profit factor gives you an objective score. In essence, you made $2 for every dollar that you lost. Respectable. But let's go further. Let's say the next week you gross $1,000. You have a gross loss of $200. Your profit factor is 5. You've netted 800, but you've made $5 for every dollar that you lost. Which week do you think most people would think who are trading did better? My guess is that most people are scoring themselves on the money, and they would think they did better this week. We would say not. No. We think this would have been, we know this is the better week that they traded, where they had a profit factor of 5. What is the difference, though, between profit factor and risk factor? Let me show you. So what is the difference between risk factor and profit factor? It might even be more important. In fact, it is more important. Profit factor is after the fact. The trade is closed and you can calculate it. Your trading for the day is over and you can calculate it as you should, or for the week, and you can learn from that most definitely. Risk factor uses the same principles, but it's before the trade goes on. It's while the trade is underway, and you set the risk factor. Now, if you're not setting any stop loss at all, that wouldn't be good. But even during the trade, you can adjust the risk factor. You can do that mechanically yourself, or we have trading robots that will do that. This is not a game of chance for us. In Las Vegas, in those games of chance in the casinos, you cannot reach into the roulette wheel and stop the marble or make an adjustment on your trade, or on your bet in the casino. But in the market, you can adjust your trade. It is not illegal. It would be foolish not to. Now, what I want to explain is the impact risk factor has on emotions. And let's just explain it this way. If your risk factor is 1 to 1, do you know what the winning percentage is? Now, winning percentage is not that important to me or to our members, but I want to take a moment and explain this, because I know for the new trader, winning percentage, you have been taught just through life or maybe through Madison Avenue, that winning is important and that it feels good. So when we're trying to get over our emotions, I need to make you aware of what the winning percentage needs to be if your risk factor is 1 to 1. It must be over 50% if you are going to make money. Now, if we change the dynamics of the risk factor from risking $1 to make $1 to risking $1 to make $2, do you know what the winning percentage would need to be for you to make money? It must be over 33.3%. Now, I think that is important to understand, and I'll explain it in the reverse in a moment. If we risk $1 to make $3, the winning percentage need only be 25%. It must be over 25%. Think about this for a moment. If you trade 10 times and you're losing 5 out of 10, maybe 6 out of 10, it may not feel good, but you will make money. If your risk factor is 1 to 3 and you lose 70% of the time, 70% of the time you lose, you will still make money. You need to be aware of that. And I'm going to share an example. I'm going to maintain his privacy. We have two young gentlemen working very, very hard during the Q School. And he started his trading with a little bit of guidance with us just 2 days ago. His name is Julian, and he did very, very well. And he was mechanically trading. He was shadowing a specific strategy that we had written for him, and he understood after days how it worked and what he needed to do. Every trade, what we asked him was, we wanted him to put on a bracket order, a stop loss on every single trade that he did, and he did. We let him decide the risk factor, and he decided to risk $125 to make $125. That was his decision, and he's shadowing this strategy. He traded 12 times in about a 3.5 hour period. His profit factor was 1.36. His winning percentage was 58%. In fact, it was the first thing he told me. He said, Don, I won 58% of the time. That was the first thing. And then what was the second thing he told me? I made $200. And then I asked, and then he told me his profit factor was 1.36. The first thing he told me was his winning percentage. And then he told me the money. And then he told, because we discussed it, the profit factor. He went as a new trader, which is what everyone does, immediately to the money and to the winning percentage. After that session, we went into the strategy and we looked at the average winning trade. In this particular strategy, it was $400 over 6 weeks, a little over 400. The average losing trade was 180. So we asked Julian to do exactly the same thing the next day. Exactly the same thing. And he did. But we asked him to set his bracket orders at risking $180 to make $400, about 2 to 1, and do exactly the same thing. He did. He traded 12 trades, about the same length of time. And when we asked him how he did, we were checking in with him. He said, well, Don, it was a bit of a roller coaster. I said, yep, know what that is. He said, but let me tell you my results. Now, he actually told me first what his profit factor was, 1.42. That was the first thing he told me from one day to the next. Next, he told me the amount of money he made, $483.76, more than double what he did the previous day. And then the last thing that he told me was his winning percentage. And you know what his winning percentage was? 42%. So the first day, he had a 58% winning. It felt good. But the second day, he actually made twice as much money with a winning percentage of 42%. And I explained this to everybody so we can learn. And he said emotionally it was a roller coaster. And I'm making everyone aware, as we discussed with Julian and reminding Julian even in this video, the reason why it was a roller coaster was his expectations are on the, I don't want to personalize it, but maybe your expectations, folks that are passing through, are not real in terms of what we're doing. Maybe you have an expectation that you need to win 6 or 7 out of 10 times. That's not how we make money. In fact, let me reverse this, and this is where you could be handicapping and hurting your trading effort. What if we reverse this? What if we risked $2 to make $1? Do you know that your winning percentage must be over 66.7% of the time to make money? What if we risk $3 to make $1? Do you know that you must win over 75% of the time to make money? Now think about this. When you do this, yes, your winning percentage will be much higher. Your winning percentage will be much higher than Julian's. But guess what? Julian is going to have a higher profit factor and is going to make a hell of a lot more money than you. Because if you risk $3 for $1, yes, you might win 6 out of 10 times. You might even win 7 out of 10 times, and you are not going to make money. This type of risk factor and the inability to understand, not the inability to understand this, maybe you're just not aware of this, but also the inability to make adjustments when the trade is on, because see, Julian is adjusting. He is aware of his risk. He's aware of this. He's aware of his risk factor, and he's making adjustments as the trade is underway to favor his outcome. You see, doing this is like peeing in bed. It feels good at first, and then it doesn't. The first step to learning anything is becoming aware of what you don't know, or maybe just being reminded of something you already know and seeing it in a different perspective. To that end, we hope this short video will help you. It's possible that you have a great trading approach already, a great trading strategy, and maybe your emphasis on the winning percentage, that emotional investment to win, to be right, to feel good, win 7, 8 out of 10 times, is actually hurting you, or hurting the approach, or hurting the strategy. I'm Bagadon at StockMarketCaddy.com. Risk factor and profit factor are not the only factors that go into trading successfully. There are others, but this one is certainly very important. If you want to learn more, if you want to learn from our experiences, if you want to share in the tools that we have built to improve your outcome, you are more than welcome to visit our website, email any questions you have, and if you'd like to speak with us personally, you're welcome to call 9 a.m. to 9 p.m. any day, including weekends. 813-758-8263. Have a great weekend.